Good morning, traders. It is Wednesday, August 6th. Taking a look at the charts, equities are trading higher this morning after yesterday's little bit of a reversal and gap lower. We talked about this yesterday. Let's just zoom in on the 30-minute chart here. We talked about how the market was set to a gap higher yesterday, and it'll pretty much, we had a lot of FOMO the day before, a full day of FOMO. Usually FOMO just pokes up or panic selling, usually temporarily. But it was a full day of everybody just piling into the stock market, buying hand over fist. They don't care what price they pay. And of course, that usually, when we have that scenario, carries over to the next day because there's a lot of people who don't follow the markets every day. They might work or something, and they see what happens in the news at nighttime. They get home, they place their orders to buy at the open. It drives the market up. And of course, the market gaps higher. They get filled, and then the market sells off and usually takes their money. And it's just a simple emotional kind of short-term move. So we'll see if this market wants to continue to roll over. When we look at the chart, it's pretty clear we had a quick sharp drop, sharp rebound on news, economic data, and then it's kind of fizzled out, and we just need to see how that traction is going to unfold going from there. Now, interesting price action. Let's jump over to gold really quick and take a look at that. So let's take a look over at the comparison chart. I've showed this a few times. The left chart here, you know what? Let's actually go to a fresh chart, one we haven't talked about in a little while. So Ashley on our team here mentioned something yesterday that made me want to look back at what happened yesterday. She said, we have some interesting scenarios unfolding. And if I actually pull up two charts. So this is the QQQ. Check this out. I find this very interesting. This is the type of stuff I love. QQQ daily chart. There's two of them. Obviously, this one here, this is the sell-off. We had the big sell-off going into April, and then we've had the big rally, and then we just had a trend change, a breakdown in sentiment and things that the market is trying to figure out what to do. Look what happened last year. Pretty much identical. And we went into a 15% correction. More or less, we came back down into the lows that were back in April. Well, a 15% correction like last year will bring us not even into those lows, really still above it. So there's potential that we go all the way back down 20 to 25% to put in a double or to test those lows. And of course, if it was to go down there and then break those lows, that could be the start of a new bear market. Not saying that's going to happen, but that is the potential. So get ready for potential chaos. Huge pressure. This is going to be for anyone who's got the buy and hold, anyone who doesn't have an exit strategy. All the people who bought 2 days ago and then bought yesterday at the open thinking the market was starting a new rally. This sentiment shift, and we're seeing this through all of our social media accounts, through our sentiment indicators, all of that stuff is very similar to what happened over here, and people have the exact opposite feeling of what we're doing. We got some heat yesterday. We closed out the QQQ 2 days ago, our NASDAQ trade. We are closing out our SP 500 position today. We are moving to cash, and it's the exact opposite of what so many people are doing. They're piling into stocks. They're super bullish. The update that we had just 2 days ago got everybody all bullish and on board for higher pricing. And of course, the more pressure we get when people say, how is the trend reversing? It was a strong day, and all of this stuff is usually a further indicator that the masses are finally long. The last people who are going to get in just before it rolls over have just got in, and the market the market is likely to tank and go against them. So that is the interesting scenario. We could be coming into a bloodbath for the average Joe who doesn't know how to avoid and benefit from this type of chaos. The other interesting thing here is the utility space. Let me just pull up the SPY. So here's the utility XLU at the top and the S&P 500 on the bottom. And usually when there's a big divergence, we tend to see a big market correction take place. And we have that. If we just take a look at this low, and we can just go from that close. We'll just go to this open here. The market is up 5.5%, the S&P 500 in that same time frame. Now, if we go and we take a look at utilities, we go from the open and we go to the close, it's up 7% in change. Now, if we look even closer of what's going on, we go from, we'll just go from here, say, to where it is. You can see the market really hasn't gone anywhere. It's really gone sideways, up just 0.5%. If we take a look at the more recent time frame, which is giving us more indication of where the market is going, you can see we're up, 8-9 times more than the S&P 500. When we have this huge deviation, utilities are usually pretty slow. When money's moving into this and moving into precious metals as well, which is, we'll get to gold in a minute, this is usually a warning sign. We saw this type of movement just before the COVID crash. We saw this back, I think, last year too. Let's just take a peek. Here is 2024. This is XLU and SPY. This is the sell-off that I just showed you that happened last year, the 15% sell-off on the S&P 500. Well, if we take a look here, I haven't run these numbers yet, but market's up 3.89%, utilities up 5%. Not a huge outperformance, but if you also notice what happened here, the stock market eventually rolled over and sold off in a big way. In fact, we could just go to where that peaked out, go to the open there. You can see it fell that much while the utility space continued to move higher. It did quickly reverse, but it was a massive divergence. At one point, it was up almost 7%, 6.5%, while the S&P 500 was down 4 and change. So when you get this big divergence, sometimes it's really big, sometimes it's not. It is a warning sign, and this is what we could see. We could see utilities hold their ground and continue to move higher as the stock market starts to roll over. Gold should do the same. Let's go take a look at gold real quick. I'll just get rid of this bottom chart here and zoom out on gold. Gold has this massive bull flag pattern. It is pointing to roughly $4,100 per ounce. And percentage-wise, that is a pretty juicy return. We're looking at potentially 20% move in gold. Now, if we were to look back at the comparison chart of what happened when the stock market topped out over here, and the stock market started to sell off, gold shot higher. If you look at the yellow line, as the S&P 500 sold off 20%, gold rallied 38%. And that coincides really well with what I think is going to happen right now. The stock market put in this high and then a nominal new high. And as it started to roll over, gold just shot up 30%. Well, the market now has put in a high. We've got this nominal new high. The market is on the verge of selling down, and gold is just starting to pick up speed and have that 20% move, potentially even bigger. I went back and I looked at what the gold chart pattern was doing back here. It was pointing to about a 20% move with Fibonacci extensions, and it blew right past it and went 38%. So there is some pretty good potential here for gold if it wants to take off and move higher. And that is the scenario that's potentially unfolding. And I really like the chart of gold. We've been talking about this. It might become a discretionary trade. We jump in with potentially an ETF. There's all kinds of different ETFs to play this. There's gold, there's 2X, 3X ETFs. There's all kinds of different symbols. But this is a very strong chart pattern. Utilities and gold could benefit really, really well here. Gold being probably the best probability play of working out. Silver and miners, I know so many people love silver and miners. It's really a super ugly chart. Not a big fan of it. I don't like stuff that moves very random and huge percentage moves. Silver miners are almost as ugly. They're holding up in this big noisy pattern, and they've come to life in the last few days. Obviously, it could break out and run, but it just is a lot harder to kind of to stomach those moves, and you could be in big gains one day and it wipes it out more than that the very next day. So yeah, whereas gold is kind of steady and you can trim out positions, you can ease out of it and all that stuff. Now gold miners, the large caps are already breaking out. This is a very strong chart pattern. So they've already broken out and they're already on a run. And that is a good sign for gold. If the large caps break out and run, we should see gold follow suit. Typically the leverage play moves first, and then we see leverage play our gold miners because they're leveraged around gold. And then we see physical gold breakout after that. A few of you want to touch on platinum real quick. Platinum had this running correction. I talked about if you're involved in it, lock in your gains, put in a tight stop. It is either going to have a blow off top and crash, or it is just going to crash. It has crashed. Now it's having a little bit of an oversold bounce. I wouldn't be surprised if it potentially sells off even more. Either way, it is a very ugly chart. I'm not a fan of a running correction to the upside. This sharp drop has done a lot of damage. It could put in a bear flag and fizzle out. It could put in a big range here and build a launch pad, which is what we want. And then if it starts to turn up and comes to life, well, then it could be another play. We could see precious metals in general rally while the stock market sells off, and maybe it comes back up to the upper end of this range. Again, I don't like it. Let it build some time going sideways. There's a lot of damage is done here. So I'd stay away from that. I know some of you are in Pladium as well. Very, very similar type of chart. A lot of damage being done. The fact that it's had this massive pullback, it needs a lot of time and a lot of wiggle room to build out a launch pad to go higher. Let's take a look at copper really quick. Again, I haven't been a fan of copper. We talked about how it was up in this, if we were to just go way back in time, if it'll load, it's in this upper range, this upper level where whenever it gets up into this range, it usually gets hit very hard and can take years to come back. It blew through that, and it was tariff-based news. Anything based around news, especially when it's up at a major resistance level and it blows through it, you got to be aware that whatever happens usually gets wiped out, and that's exactly what happened. I said, don't touch copper, avoid it. It's just noise. Just because it moves up and everybody's talking about it, and those who are long are bragging about their positions, doesn't mean you should get into those. And that's what sucks people in. People talk about their winning positions. People get FOMO, and they feel like they're missing out because everyone is talking about it. But you need to step back and be like, okay, that move is done. If you were long and you caught that news-driven move, that is your lotto ticket. That is your quick win. Lock it in. Be happy with it. Don't think it's going to be some long-term play you're going to make a fortune from. You had that move, and that's what you need to focus on. So I posted an article yesterday on Wolf Street here, and it talks about FOMO. It's actually a pretty interesting read. It goes into the psychology of what's going on and all of that stuff. I share some charts of how things have unfolded and how to go about it. I talk about personality and how to test yourself to know what personality type you are, to figure out how you need to attack the markets and what kind of help you need, if you need any. Unfortunately, most people need help navigating these markets because our emotions and personality get in the way. We talk about the housing market. We talk about real estate, and more or less wrap it all up. So if you're interested in learning more about that, and a lot of people have FOMO the last couple of days, huge. It's been a big thing, and now FOMO traders are going to be offside and potentially under some deep water. That's why we wanted to share this article. It's important to have a plan and to always be aware the markets could correct, and you don't know how big the correction is going to be. So we do need to exit when the trend finishes, because it could be a 3% pullback. It could be a 50% pullback that takes 10 years to recover from. Nobody knows, and protecting our lifestyle, our capital is number one. And when the market gives a new opportunity, we just get back in and we trade it. Who cares if we buy in at a higher price? Who cares? Well, ideally, we buy in at a lower price. But the key is protect our money, and then we just get into another opportunity when that time comes. Other than that, I think that's about it. Let's take a look at the chart of bonds. We haven't touched on bonds, I think, in a little bit here. We'll touch on Bitcoin as well. Bonds had a nice rally. Obviously, we're seeing utilities, metals like gold, and bonds move up. They are seen as defensive plays, and so there's money naturally kind of just pushing up into those. Now, bonds are up into resistance, so we'll just see how that. I'm not a fan of bonds when we look out at the big picture. They're still in a downtrend, or at best a stage one base, and we don't want to mess with something in a stage one base simply because it carries a lot of risk. Risk not only when something's going sideways. I have it shaded red here, stage one. It means it has unpredictable moves, and you could waste years. Even if you do pick the bottom, it might take years for it to actually start moving up. And that's one thing we can't make back is time. We don't want to waste time. We want to be in a trade that's making us money now. And if it's not making us money, we get out and protect our capital and find something that is. Let's take a quick look at Bitcoin, up 0.3% this morning. Now, yesterday it took a little bit of a haircut. Well, really over the last couple of days, it's got this bull flag pattern that it has broken down with this kind of shakeout that we talked about. The market does like to have these shakeout days. We talked about both of these, I think, actually on the days that the gap down was happening and the drop. This is what we need to figure out. If the stock market bounces and rallies here, we should see Bitcoin recover. But if the stock market trend truly is over for now, we're going to see the stock market sell off, and Bitcoin is probably going to unwind to the $100,000 level. So this is a very critical level. Yesterday's low is going to be fairly significant. It needs to get some traction. What we talked about yesterday was, because the NASDAQ has a trend exit signal, you do not want to hold stocks. You don't want to hold Bitcoin either. If you hold individual stocks or sectors, all of those should be exited, because the stock market is now in a downtrend and it's going to pull all of those down naturally. Miners might buck the trend, but again, they're still stuck in the stock market, and they can have a down day with the market. If it's a big enough and panic wave of selling, miners will get pulled down with it. So Bitcoin here showing a lot of weakness, and the fact that the NASDAQ has broken down, the trend is down for the NASDAQ. It also means the trend is down for Bitcoin. And of course, you technically shouldn't be holding Bitcoin anymore. This is an exit, more single signal for Bitcoin, and let it figure itself out, and we can reanalyze that if you're need to get back into it later when there's a setup. On another note, on Sunday, I went out with my parents and my family, who went out fishing on a charter just in a town, one town over, and we caught 10 lake trout. Some of them were about 10 pounds, 9.5 pounds, and just pretty cool video clips of the fishing trip here. Take a peek. All right. Nice. He's a beauty. Oh, yeah.
Oh, he's giving you a little test.
Well, keep that tip up.
Yeah. Keep the tip up.
Come on.
Oh, is he off now too?
Go back. Woo, fight him, baby. Don't let him take you.
Step back, Benny.
Don't pick up that.
There we go.
Woo.
That's a stubby belly on that one. So you reach in behind the air bladder and it'll all peel out. Here, I'll step out of the way so I don't get blood on anybody.
How's that feel?
Gross.
It's lunch. It's your lunch, Benny.
Did it have anything to really get? Ow. Does it have anything in its stomach? No, that one has an empty stomach too. Come on, Ben.
Rip it.